The stock market is less efficient than the Forex market. Every professional trader comes out of a discretionary trader. If you play it safe, you'll get it safe. If you're good at catching very volatile moves, gold is fantastic. I've taken a $300,000 account to $2.5 million in a matter of a month and a half to 2 months. That's a very powerful question to ask. The most millionaires are produced with stock trading, but it requires a lot more patience. Now, why do I say that? The stock market is less efficient than the Forex market. The Forex market is extremely efficient, which means if you want a price to buy or to sell, there is almost always a counterparty that says, yeah, that's good enough for me, I'll take it, right? So if you say, I want this price, there will be someone that says, I'll take that price. If you say, I want this price, there will be someone that says, I'll take that price. Now, what that does is that brings in competition. What does that mean? It becomes a Chinese market at that point. It means I can give you a better rate than that guy. When that happens, it kills margins, right? So what would be priced here, what it's actually worth is here, becomes lower and lower and lower, tight, really high, based on the buy and sell spread. That makes it extremely efficient. Now, every now and then, even the currency markets get inefficient, right? Which means someone out there says, I'm not paying you this price, I don't care what you do. That makes prices go volatile. This is a lot more common in the stock market. Things go a lot more volatile in the stock market with that logic. So people take advantage of that as traders, as especially trend traders. They make a lot of money doing that stuff. So the mistake number one is every day. Opportunities every day in any pair. Any pair is good. You're keeping your options open. Every day is wrong, because you can only be active when the market is active. You don't want to be looking at trading as what can I make every single day? As long as I can make $100 a day, I should be good. As long as I can make this per day, I should be good. Like, you need to get rid of that mindset and move into what's my average? How do I do in good times? How do I do in bad times? What's my average turning out to be? If you start to think like that, now you're a businessman rather than an employee, right? You have to treat it like a business where there's good times, bad times, but then it averages out to whatever that number is. That's the name of the game. A retest is prices from a certain level moving away and then coming back to that level to test again. Before they move away, it bounces, 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 and then it starts to move away. Do you think people will run after that? They will buy that? They will chase that? Absolutely they will. What happened to all the short sellers trying to sell off this level? What happened to them? They're all stopped out, right? So they're going to flip into buyers. So everyone is flipping to the buy side as it breaks out. As everyone runs after that buy, where do you think their stop loss is? Right here. So a retest is just going and grabbing all those orders to get more liquidity, right? So if someone has a massive order and he's not filled, a retest would make a lot more sense to add in the remaining position. So brokers will help facilitate that. That's actually a very powerful question, and that's a very good question, and this question should apply to everybody. Confidence comes from knowing your setup really well. Missing opportunities is not necessarily a bad thing. Missing opportunities has nothing to do with confidence, I would say. That's a missed opportunity, but it's telling you your edge is there and there and there and there. You're just not on it. But if you're seeing the market move, you don't have an edge to capture that move, then you're not really missing any opportunities. The markets are just moving, and you're assuming if you were there, you would have made money. That's the wrong misconception. You don't want to fall into that trap. That markets are moving, everyone's saying I'm making money, but then you feel, well, I don't really have an edge, but if I was there, maybe I would have made money. Not like that. So please be careful of that. That's not something I enjoy, because being a discretionary trader basically means I'll see and I'll decide accordingly. You can't measure that. You can't multiply that. You can't scale that. So being a discretionary trader will pay the bills, will never get you a Rolls Royce. So that's just my opinion on that thing. You want to scale, you want to grow, Generally, people have a systematic process, a process they can repeat, a process they can measure, a process they can say, that's my setup, and it's not so great. I would say every professional trader comes out of a discretionary trader. So the session, it's not about what session should you focus. Maybe find out from yourself on where are you the most available, the most focused, and the most refreshed trading. So if you're coming in at the end of your day after work or something, you want to trade in New York, don't do that. Skip that. But if you're available in the morning and you're great in the morning, you wake up fresh and everything, trade morning, whatever that session might be for you. But you got to then dive in and see Asia works very different to London, works very different to New York. And when they overlap, it works very different as well. So you want to find out which session, where do you want to operate. Then you got to stick to it for a particular period of time, doing it over and over and over again, and then finding out where your results actually come from. If you're good at catching very volatile moves, gold is fantastic. I wouldn't say no to that at all in this current market condition. If you can trade moves and you're a swing trader or a trend trader and you know how to catch movements and you understand the idea of trapping traders, if you understand that concept, then gold is fantastic because I have never seen that kind of manipulation in the market back and forth ever. So this gold market is fantastic for those of you who are not buy and hold junkies. You need to learn to maneuver this market very, very carefully. It's extremely lucrative. So definitely, if that's where your interest is, go do that. I've always tried to scale in from day one, because I always, when I first started, I had a very tiny account and my job was, can I make more than $50,000 per year? If I can make that, I'm considered free. But as you start to realize that you're making 20, sometimes 30 randomly, you don't really look back and saying, well, at least I'm working from home. You don't really feel free because you're actually spending a lot of time in front of the computer. So it's an illusion that you get trapped in. So you're like, well, maybe that number needs to be bigger. If the number is bigger, I'm technically free. And that you get stuck out of the working rat race into the trading rat race. That's what's happening. But what you got to do is you got to focus on, can I do this in a more simplistic way where it doesn't require too much of my time? I've been playing with scaling in for quite some time. I've had records where I've taken a $300,000 account to $2.5 million in a matter of, I think, a month and a half to 2 months. If you play it safe, you'll get it safe. But if you try to play it big, you'll make mistakes, but you'll learn along the way.